What is going on YouTube? Hater back making another brand new Crypto TV episode. In today's video, we have to look at XRP, Ethereum, Bitcoin, as well as the S&P 500. And of course, we have to talk about what happened yesterday, which was a very big day for the economy as a whole, as well as for cryptocurrency and a lot of other things. And that is the consumer price index, the core inflation, and the regular inflation, as you guys can see here. For November, we got that released yesterday, December 13th at 8:30 a.m. in the morning here. And we got some good news for the most part, but we definitely have to talk about it. And this definitely is going to affect a lot of people, believe it or not. You know, a lot of people hear, oh, inflation went down if you were paying attention, but just because it did doesn't necessarily mean it's to our benefit. And I want to explain why that is in a second here. So we are going to be looking at XRP, which did manage, surprisingly, to break ever so slightly yesterday outside its resistance here. We had this beautiful symmetrical triangle, just started to pop off here, but I'll explain why that's not necessarily guaranteed breakout yet, because we need to look at the weekly, for example. And then we are also looking at Ethereum, which closed us above a major resistance here, which triggered a buy-in. Same thing with Bitcoin here. This is also a possible buy-in if you were up for it here, because we confirmed closing outside of the ascending fractal here, and we are starting to head up higher, which is definitely a good sign, although it is still risky because this typically has a bearish bias here. But we are taking the risk because previous trades, you know, if you stay in the market for a little too long, we do get, naturally, it just closes our positions on Bityard here. But this is another opportunity to buy in long because we are closing above this major resistance here. So lots of very interesting, important things to discuss. The S&P has rejected actually yesterday, which is quite interesting. We have to talk about that too. And then also today's video is sponsored by OWNR, but more on that later. With that being said, definitely make sure to smash the like button, turn on post notifications, subscribe, and let's dive into today's episode. So I guess I'll start off with looking at XRP and the cryptocurrencies. Then I would like to talk a little bit more about OWNR, and then we'll go into the inflation data and why that's so important here, because I know a lot of you guys want to hear about, you guys complain more that I don't make crypto the first priority and then inflation second. So I'm going to do it this round. But I highly recommend, if you're watching this video, I highly recommend just listening to me about the inflation data and what exactly came out, because it is very important. And this affects all of us, regardless of trading around. This affects all of our money and all of our positions and what's actually, at store, in store for us moving forward here. Now, just to start here, you can see top 10 cryptocurrencies, everything is consolidating. You can see as of this morning, we're up about 2.4% across the board, 2.07 if we take top 10 cryptos. But you can see we're not doing too bad overall. BNB is up. Everything is pretty much slowly up about 2 to maybe 3% overall here. And that is definitely a good sign. The second, we got core inflation data and regular inflation data. For the stock market here, crypto reacted positively, so did the S&P 500, but the S&P 500 fell, and the other cryptos actually started to incline and continue to increase to the upside here. Now, moving forward, you can see for the most part, XRP has kind of rejected right now off this resistance. As you guys remember in the past couple of videos, we've drawn on a red band of resistance here. A while ago, you can see where it's become problematic for us in the past here, but the fact that we're retesting this right now, it's definitely a good sign for possible reversals and breaks to the upside here, but we haven't seen any runs just yet. And the reason I'm not buying into XRP just yet is because of, obviously, the major descending triangle that we have here. You can see clear as day right now, we do have a descending triangle on XRP's weekly chart. And I've said this very much so all the time, every single day in every video. We're not buying into XRP until we break this purple band here. The reason I've been kind of hesitant and just a little bit skeptical of buying in is because every time we've come up to retest this resistance, notice how many wicks we have and how many times we reject it. So yeah, during the day, during the week, we do end up closing daily candles very much so above this major resistance here. But at some point or another, we end up closing the weekly chart below here. By Sunday, we're below it. You can see consistently. It happened here May of 2021. Happened again September of 2021. It happened in November of 2021 here. Then we retested it with a wick in March of 2022. We didn't wick it October 2022, and then November of 2022. And here we are again in December of 2022. So what we're looking for Actually, we did wick above here just a couple of weeks ago in October, but you can see now we're back to retesting this again. What we're waiting for is for a weekly candle to just close us above here. That's all we need, just a little bit of give. If we close a weekly candle above here, close us at 43 cents, close us at 44 cents, close us at 45 cents, at any point just above 40 cents to 41 cents would be enough confirmation for me on the weekly candle to buy in, because that, I think, would stem a break to the upside here, and we could easily see this as a target anywhere from, I would say, 56 to 80 cents would be pretty much my prime target. That's why I've been so conservative with XRP, because just as easily as we could pop off and run up to 80 cents, we could easily reject, fall to 30, if not 16 cents. So it's very, very, very prominent and important that you pay attention to XRP's weekly charts, not necessarily the daily. This is helpful, but it is not exact. Now, with all that being said, I do want to talk a little bit more about OWNR with you. I want to give a huge shout out to OWNR Wallet for sponsoring today's episode. As with all cryptocurrency projects, please do your own research and never invest anything you can't afford to lose. So guys, the OWNR Wallet is a fast-growing international fintech company that's building a crypto ecosystem to allow its users to do everything with cryptocurrency in one place. It is available in a desktop version, and it can also be downloaded on iPhone via the App Store or Android with the Play Store. Founded in 2018 by a team of IT professionals who have a background in crypto, finance, and tech, it is quite the platform. As far as my research shows, the OWNR Wallet is a registered private limited company in Estonia and is licensed to provide virtual currency exchange services and crypto wallet services. You can even verify this at the bottom of their website. Now, according to a press release in mid-2021, users from more than 200 countries and territories across the globe can purchase cryptos from the OWNR Wallet, including the United States. Through the OWNR Wallet, users can then buy cryptocurrencies using fiat currencies, as well as sell cryptocurrencies to receive payouts in more than 60 fiat currencies available. Now, the OWNR Wallet supports all major traded cryptocurrencies like Bitcoin, Bitcoin Cash, Ethereum Litecoin, Dogecoin, Bitcoin Cash SV, Zcash, Dash, TRX, USDT TRC20, and even Solana. Additionally, it also supports all the ERC20 tokens, including Tether, as I mentioned before. Now, the best part is they even support Visa cards and MasterCards for buying cryptocurrencies. And a few of the many features that the OWNR Wallet offers include a prepaid Visa card that can be recharged online using Bitcoin, Ethereum, and other cryptocurrencies, as well as the wallet is also capable of restoring your account with the help of a seed phrase. Now, not only does it support seed phrase recovery words, but also extends the support in 8 different languages. Despite the mechanism, OWNR Wallet retains its non-custodial nature, and users have complete control over their seed phrase and funds. What's also cool is OWNR Wallet users can even add SegWit addresses. Using these SegWit addresses can then speed up transaction settlements at lower fee rates. And besides the many security features that the OWNR Wallet offers, there are also additional features like a widget to monitor cryptocurrency prices, balance update notifications, and even asset discovery features. Lastly, for those wondering how much a service like this costs, download the app and registration is completely free. And in regards to specific fees, you can find all the info on the OWNR Wallet's website. Now, you can also partake in the OWNR Wallet affiliate program by enrolling with the CPA system or just recommending the service to a friend, which will allow you to receive a lifetime passive income of up to 38% of the company's net profit. So guys, if you want to check out the OWNR Wallet app and use it to buy, exchange, or even sell crypto, then make sure to check them out with the link down in the description below. Otherwise, shout out to OWNR Wallet for sponsoring today's episode, and let's get on with the rest of today's video. So guys, moving on from XRP, I do really quick want to look at Ethereum, Bitcoin, and then we're going to look at the stock market here. Without saying much, you'll notice here that we are starting to break outside a trend that we've been pretty much inside of, stagnant for a very long time. Every single day moving forward, it's been what is this, the first, the second, third, fourth, fifth, sixth, seventh, eighth, ninth, 10th. You know, we've had so many days here. I'll draw a date range here, and you can see since the beginning it's been about 2 weeks of sideways consolidation, uncertainty, flatlined out at 50 on the relative strength indicator, and for the first time after 2 weeks we've managed to confirm closing above a major channel here, and here we are starting to take off. Because we've confirmed closing outside this major resistance here, this is giving me the confidence to buy in and long this to the upside here using Bityard, the #1 cryptocurrency leveraging exchange that I like to use. This is also linked down in the description below where you can get free crypto. Now you can see here, I'm moving forward to XRP, or sorry, back to Ethereum here, because we've closed below here, or sorry, because we've closed above this resistance here. Why won't this work for me? There we go. because we've closed above it right here, this is giving me a slight hunch that we could see a potential swing up to this resistance up here, up to 1450, if not even as high as 1370, in between that range. I do believe now we have the confidence to swing up to retest the moving average right here. There might even be some sort of up trim I can leave that's almost gauging us and gearing us to move up to this support here. You can see consistently when we hit it, we tend to break up, and there's a chance this could slowly move us up to our moving average at 1450. So I'm getting excited that we're starting to see some movement to the upside here, and it's definitely a good sign that we could be seeing some positive movements within these cryptos. Same thing applies itself with Bitcoin. Now, just recently, we did reverse the way we had this this charted. We switched from the sideways channel to now being an ascending fractal, which typically has a, I believe, bearish bias. You could see on the S&P 500 when we fall into one. When it's a breakdown into an ascending fractal, it typically has a bearish bias. So here we are in Bitcoin, a breakdown into an ascending triangle typically has a bearish bias, but somehow we've confirmed closing above major resistance, so we do have the opportunity, or we did have the opportunity, kind of still do, to enter trades here with, you know, a closer stop loss, maybe down to 17.5, with the possibility that because we've confirmed closing above here, we could start to see a run to the upside here. We could start to see movement up to $20,000. It's very possible here, and it is exciting mainly because we've broken, once again, a stagnant sideways trade that has been pretty much trending inside about a $200 to maybe $100 region here. Let me just draw it for you. Where is it? Here's the date range. Once again, for a total of 12 to maybe, about 12 days of sideways consolidation, we finally confirmed closing above a major resistance and sideways channel, and now we're starting to stem to the upside here. So this is giving me reason to potentially take a moderate to aggressive trade, and the reason this is not a conservative trade is because of the S&P 500. This is where things get a little interesting here. Now, before I forget, I really want to talk about this consumer price index and what exactly happened yesterday. So how the inflation data works is that wasn't inflation data for December. We get it a month after. So we got the information from November's inflation yesterday in December. It's about a month delayed. And you can see here, we're actually not doing too bad. It's quite interesting. So you can see right here, we had for June, we had inflation at 8.9%, and June for core inflation was 5.9. This was what we think is the peak, hopefully, fingers crossed, because we've done it before in the past here, but this could hopefully, we thought we peaked right here at 8.5 in March, but here we are again at 8.9 in June. We thought this was the top for inflation, and there's a very good chance it could be. And you can see here, this actually started month after month, started to skew lower here. The only problem was what happened is core inflation, which is taking out food and energy, actually went up, which means a lot of other things were actually climbing while everything else was starting to drop, which is not a good sign when you remove food and energy. If food and energy are falling here, that's what causes this drop to happen here. But we had core inflation move up. Well, for the past 2 months in a row here, you can see September, we were at 8.2, and core inflation was 6.6. October was 7.7, and core inflation was 6.3. And then regular inflation was 7.1 for November and 5.9 for core inflation. And this is really, really, really good. Now, they're expecting, I believe economists are trying to get, or they're speculating that come mid or maybe end of 2024, they should be able to get this down to about 4%, maybe even less, but around 4%, which is not bad, with the goal to get this obviously to around 2 to 3%, maybe come 2025, which I think is what I've pretty much planned for here. But you can see for right now, we're at 7.1 and 5.9, which is good because we're starting to stem lower here. Unfortunately, there was some problems in the actual inflation and what actually happened here. So you can see we're at 7.1%, but you'll notice here that we're still ticking upwards. In regards to November from the previous month, the seasonally adjusted changes from the preceding month, we do have some issues to talk about. Medical care services have gone down. That's good. Compared to the previous month, we had transportation fall. Shelter has continued to go up every single month since, dating this back to May here, we've gone up. So 0.6% we were up in May from the previous one. June was up 0.6. July was up 0.5, continuously being added on top of each other here. And you can see by November, last month, we were up 0.6 again for shelter, rent, and housing, which means in total, we're up 7.1% in the past year, which is not a good sign. That means shelter has continued to spiral to the upside here. That's not what we want because rent is horrible right now. Then moving forward, we have clothing and all this stuff is still going up. Used cars, fortunately, finally, have continued to spiral down much quicker than we had originally anticipated here. Down 3.3% for the past year in total, but we're down 2.9% from October and 2.4% from September here, which is definitely a good sign. And then moving forward, you can see gas has also gone down 3.5% compared to the last month. And then we have, where is it? Gasoline we discussed here. Where's food? Food is actually going up. Food and then food away from home when you eat out is also going up. So we have these issues here. Shelter, rent, and housing has continuously gone up this year, and it has not stopped. Food has also gone up this year and has not stopped. The only things that are starting to fall lower is the used cars and trucks, as well as gasoline and energy. Those two categories have actually started to fall quite significantly, and probably was the reason why we're getting this lower yield. But food and shelter are the big things right now that people need, regardless. Used cars isn't, we don't necessarily need used cars as much as we need food and rely on them, food and shelter, much more than we rely on transportation and energy and gas, because we can use alternative methods for gasoline and energy, and we can use alternative measures for used cars. Just don't buy another car, use the current one, fix the current one. So that's not necessarily something we need. We need shelter and we need food to go down. When we start seeing those go down, that will be a good sign. But otherwise, with food and shelter going up, we're not really doing too well just yet. So just don't get blindsided by this movement now. But otherwise, let's move on from here. So we had a very, very, very positive reaction to the market yesterday, and we actually closed higher than where we opened. You can see we opened at about 39.86, and then we closed at about 4,024, but we did actually peak at about 4,098. Well, why did we get rejected there? Well, that's a great question for numerous reasons, which is another reason why I didn't buy into this, and I've been very hesitant on this descending or buying into the S&P right now, because again, there's a part of me in the back of my head that's saying there's a good chance we might, swing to the downside before we see any sort of break to the upside here. If I zoom out, you can see that we have, like I said, in the past, a descending fractal here. This doesn't show good signs. Not only is the price balancing or retesting this purple downtrend, which you can see has consistently rejected off the purple downtrend here. Every single time we've rejected and fallen here, we're retesting that same thing today. And the past couple of days, it's been 3 weeks of rejection. Not only from that, but you can see here, it's much harder for us to break this major white uptrend here. It's much harder for us to break this major white uptrend here that we've had for approximately like 12 years now. Ever since 2009, if not 2010, so almost 14 years, we've been rejecting off this white ascending fractal here. So the fact that we're retesting this in a market that's trying to suppress us and push us to the downside just screams we might be overbought. Now, typically, it's a good idea to buy in. We get better confirmation when we're overbought on the weekly charts here. We're not there just yet, but we're trading at 50 on the RSI and we're overbought. We're hitting that top resistance here. I'm trying to find an example. Like right here, we're trading at 50 on the RSI but we were retesting the top resistance, and that caused a correction to the downside here that you guys can see as clearly happening. So moving forward, you can see we're having a similar result. You can see right here, we're at about 50, 52 on the RSI, retesting this level right here, but because we have a downtrend and a price ceiling, we have the ascending triangle, or the ascending fractal that's acting as resistance, and the moving average. We're having a lot of uncertainty, and the longer we hang out here, the more I think we're going to be correcting to the downside, which is why I haven't pulled the trigger yet on buying in, because I am a strong believer there's a chance we could be swinging lower here, especially after yesterday's rejection. I could be totally wrong here. We're also rejecting off this uptrend here that I've drawn. You can see we kind of correcting downwards from here. There's a chance I could be totally wrong, and come today, we could easily start to see a swing to the upside here. But there's also a big chance we could correct to the downside. I thought it would have revealed itself yesterday. Had we closed above here, it would have been a prime opportunity to say, okay, time to buy in, big buy-in opportunity. But because we're trending here, there's a much bigger chance we could see a swing to the downside, and that's kind of where this market is moving towards. Otherwise, guys, that's about it for today's video. Shout out to OWNR for sponsoring today's video. Subscribe, turn on post notifications, and I'll see you in tomorrow's video. Peace.